Okay, I think we're live right now. Let me know how well you can hear me. Just type 3 if you can hear me well. Billy is here tonight, as you can see, over here. There he is. Grow Mechanic is here. 3, that's good. We got Nanana from Norrland in Sweden, Neil Hahn, Rickard from Sweden, a couple of Swedes, Vidotas from Lithuania, Country Sister from Texas, Central Texas, Grow Mechanic. Great to see everyone. Aaron Levy, so nice to see you so much. Read in the bonds lately. Yeah, that's what one of the main topics we're going to cover. I'll try to basically cover everything and answer as many questions as possible. As usual, I'm about 10 minutes early. Neil Tutty says hello, Monaco. Jonathan, Daniel. Hi, Jonathan. Jeff England from Cincinnati. Joker Alpha. Tony Green from Hertfordshire. Blast from the Past. Nice to see you. Grow Mechanic. Harvey Williams. 2s, 10s look like they're about to cross. Any thoughts? Yeah, they're still not crossing. They're about I think 15 basis points still normal. I think they will eventually do so, even though the Federal Reserve could try to manipulate the curve, let longer term yields go higher, but that's not a very good thing either. So for government finances. Dave Martin from Cornwall. Christopher Powerthorse from Spain. Pippin Gogo from Colombia. Sarah Brown says, great interview with Elijah from Liberty and Finance. Yeah, I enjoy speaking with Elijah. We speak regularly. Indy, I hope Billy give Billy a pat. Yeah, Billy's had a good day. It hasn't been such a nice day here today. It was nice yesterday. T4 Parts from Carlisle. Alain Roy de Montréal. Tony Green, sorry, from PSL, Florida. Port St. Lucie, I think, isn't it? PSL. Dilwyn Roberts from North Wales. Carlos Garcia, North New Jersey. James Bernard, are you still purchasing gold at the moment? I try to as much as possible. I've been stacking a bit more silver because it's cheaper, but I try to, if I have extra fiat after all my expenses at the end of the month. I also have been adding on to some of the miners in the last month or two, even though that's not a big chunk percentage of my savings. Harvey Williams, any plans to get Gonzalo Lira on your show? Well, funny you should ask, because I like listening to Gonzalo Lira. I was listening to him this afternoon talk about Victoria Nuland, and what he said about her is I've known for many years. He's an interesting thinker. Joker Alpha, would you trade gold for oil and then burn for heat and transportation? I don't really need physical oil personally. I mean, some people need heating oil in the UK for their, like if they have Some houses, people buy heating oil. I don't really need oil. Some people say that a basket of commodities could back currencies, but I think ultimately really gold and silver are money because they're not really consumed like normal commodities. Yes, silver may be so, but not gold. Jonathan Marsh, maybe one day gold will jump to 100,000 an ounce. That's not the reason why I hold gold. I mean, if that were to happen, that means that things have really unraveled. $100,000 per ounce. I think people need to focus more on the relative value of gold. Yeah, that's the way I see it. Carlo Iaboni talk about India, Brazil, and China helping Russia frustrate the sanctions by trading in rubles. Should the rest of the world punish them for not sticking with the right team? Well, I personally don't think so. I don't see why one country, let's say A, should have anything to do with what B and C are doing, as long as it's legal. Country A, in this case, I guess it would be the US, can't tell country B and C what to do. They can tell what country B can do with them, or C, but not if they're doing something completely separate from country A. So I don't see anything wrong with it. Oh, BP, what is your outlook on iron ore? Some seniors are paying really good dividends. Yeah, I mean, I have a company I bought some shares in called Vale, a Brazilian one. And it's one of the biggest companies in Brazil, and it's paying a double-digit dividend. I'll show you the company. And it's involved in iron ore and also nickel. So here's they have ADRs on the New York Stock Exchange. So there you go. Vale, a largest producer of iron ore and nickel in the world. Vale also produces manganese, ferroalloys, copper, bauxite, potash, kaolin, and cobalt. So there you go. I think the prospect for not just iron ore, but commodities in general is very good, only because fiat currencies are losing their value very quickly. Harvey Williams, any plans to write a book? I would buy it. Many people have asked me. I mean, I've never written a book. I've written articles and things like that. Maybe one day I could write a book. I think the thing to do is just to start and get a topic to talk about. Carthago Delonda asks yield curve inversion. Yeah, I mean, the one that really will nail probably the economy's coffin and point to a recession would be the 2s10s, and that's not inverted yet, but there's I'll show you here. I took a screenshot on Friday of the bond US Treasury market. Let's have a look here. So here we are. So that's the screenshot that I took. So as you see here on Friday, it was a really bad day. The fact that the yields went up double digits, like for example, the 2-year here went up almost 16 basis points, and that's huge. 2-year note, I remember trading these markets, 15, 20, 25 years ago. A move of 1 basis points or 2 basis points was huge. and now it's moving almost 16. 3-year up 16, 5-year up 18. The 10-year was up 14, and it's almost at 2.5%. So what we need to see, in my opinion, is the 2-year yield here be more than the 10-year yield. And as you can see, there's still about a 20 basis point difference. It's still positive sloping. The ones that are inverted are like the 3 to 10. The 3-year is higher than the 10. The 5-year is higher than the 10, and the 7-year. And also the 20-year is a lot higher than the 30. So yeah, that, and the 20 to 30 was inverting months ago already. So that was probably signaling that. But the other thing that's worrying, I think, is not just the yield curve inverting, but yields going higher, a lot higher. And we're going to look into that today at some charts, long-term charts of prices and yields. So it is 9 o'clock. Our clocks went forward overnight. So now we're 5 hours ahead Eastern of the East Coast of the US. For about a couple of weeks, we were 4 hours. Dilwyn Roberts says, Glint in trouble. Tell me what you know. I haven't heard of anything Glint being in trouble. You tell me. I haven't heard of Glint being in trouble at all. So is there any news? Wang Song, do you know if Brazil is trading with other BRIC nations in currencies other than euro or petrodollar? No, I don't, but I wouldn't be surprised if they would, but I don't know whether they are. Jonathan Daniel says everyone is forgetting uranium. Yeah, I do look at other things and commodities. I haven't, I haven't really looked at uranium closely. Joker Alpha, Mario, is the Ukraine war on the Black Swan event, or do you think it will be some other event? Yeah, I think it is very significant what's happening, not just the war itself, but all the, I mean, we saw Biden yesterday make some really explosive comments. He said that Putin should be removed from power. And today, though, the State Department backtracked on that, but the Europeans are a little bit surprised. So yeah, things are getting quite interesting. And one of the reasons I think Joe Biden and the deep state are doing this is because they're in trouble and they're trying to detract attention from their own weakness. So who knows? Sarge 27271 says, howdy, Mario. BP, thanks as always for your insights. If construction and manufacturing face a downturn due to everything going on, wouldn't that be negative for iron ore? I personally think commodities are going higher, not because the economies are doing well, but because the currencies are getting very weak. It's the inflation situation. It's the loss of confidence in currencies, where people want to have anything but the currency, not just in the US, but globally. It's kind of the seeds of hyperinflation. F1 Sherman 52, whatever happens, there will be a false flag. Yeah, I am a little bit concerned about that, because the bond markets are very important, because the bond markets determine the price of credit, or money, if you want to call it. I think it's more credit. And without cheap credit, the deep state, Wall Street, the whole economy of the West can't operate, or they'll have a lot of difficulty operating. A lot of firms nowadays they run on credit fumes. So if the price of credit increases very quickly, it's a big problem. So how do they solve that? Seeing that the Fed and other central banks are supposed to be tightening, well, they come out with some kind of false flag, and I think that is concerning. But I think we should all be prepared for that, and that's one of the reasons why having gold and silver outside the system and other hard assets is so important. Is it a good idea to buy Russian rubles? It's like buying paper gold at a fraction of its price. Well, if you can get a hold of rubles, but I think buying gold and commodities is indirectly being exposed to the Russian economy. Over here says the subvariant of COVID percentage-wise is picking up here in New York City. Yeah, I don't even think about that anymore, to be honest. A little update. I played golf this morning quite early. It was a competition, and I actually came within an inch of a hole in one. The ball stopped right next to the hole, and then a few holes later, I came within a foot. So I played quite well today, which was nice. If I had made the hole in one, I would have had to pay a lot of drinks at the golf club. So there you go. I've had two hole in ones ever. How currencies exchange value works without a dollar SWIFT system, rupee to rubles. The SWIFT system is just a communications network. That's all it is, a secure communication network between financial institutions. So I think the Russians and the Chinese are developing their own networks, and I guess India would be included in that. Anders Orsted, do you think deep state and Putin, Lord of the Flies, will drag us into nuclear war? I don't think so. I don't think so. But they're I think it's going to be a bit like the Cuban Missile Crisis. Will be very close, but it's significant. I think that Biden made a speech in Poland yesterday saying that Putin should be removed from power, and there was a lot of shock. And then his Secretary of State has come out and said, no, we don't want to do that. So that's one of the reasons why I think they're trying to manage this crisis. It's a managed crisis. And I think the nuclear card is just to keep us scared. But yeah, and I hope I'm right. Harvey Williams, any tips on how to get started playing golf and getting good at it? Yeah, take lessons if you can, and practice a lot. That's what I did when I started, and you need to be very patient. Yeah, lessons and patience and practice. And also playing, going out and playing as well. Yeah, Wina Sung says Russia has emirs and China has SIPT. Yeah, it's similar to the SWIFT. DMC says, I thought your 14 symptoms of hyperinflation video was excellent. Shared it with my family. Oh, thank you. Timo, why does the world need a reserve currency? Well, it doesn't really. I mean, what the world needs is sound money and currencies to be backed by sound money, gold or silver. And all a reserve currency means is that a particular country has trades a lot, and has a big economy. So I watched a little video, I don't have it here, but talking about how reserve currencies changed. And around 1900, it was very balanced. I think 49% of reserves were in sterling, 20% in French franc, 15% in Deutschmarks, Reichsmarks, and mainly because those are the major trading countries. And what we've had now since since 44 in Bretton Woods has been an anomaly that just one major currency has dominated. And that's been, I think, a consequence of the two world wars and how the US benefited so much from that, and Europe and the rest of the world were also were hurt quite a bit from that war. Tunes and More, otherwise known as Harry Den 2, thank you for your super chat. Says, thanks for all you do. I can't yet golf because of New York weather. I can, however, watch these shots across the bow of the petrodollar. Bring back tally sticks. Tally sticks are very interesting. They were around, I think, up until the early 1800s, and basically it was a stick issued by the king or queen in England, and it was like a credit instrument, and it couldn't be counterfeited. So it was basically a currency issued as a stick by the state, not by the bankers. And it worked really well, tally sticks. Maybe I should do a video about tally sticks. Gordon Hamilton, I hit the flag stick on a 167-yard par 3 2 weeks ago, only a foot from going in. Yeah. Yeah, it's I didn't hit the flagstick, but I ended up quite close. David Bradley, good evening. River Rats, I saw Harry Dent warn New Zealand that their housing market is primed for a 40 to 50% collapse. Well, you know, if interest rates continue rising or yields continue rising, it's gonna, well, mortgage rates are gonna go up as well. Credit card rates are gonna go up as well. Everything, all the costs of finance is gonna go up, and coupled with the rising cost of living, it will bring house prices down. It should bring house prices down. But then again, you know, the powers that be, they've been so determined to keep this housing bubble going ever since the 08 collapse. So you never know what they're going to do. Mario, during the Cuban crisis, there wasn't any way to deactivate an ICBM in midair like there is now. I see. David White, thank you for your super chat. As the West can't exploit Russia anymore, will it devour itself? I think, you know, if you look at the bigger picture and what has been happening to the West, what's going on now is the last, it's like a bully that's lost and, you know, getting really angry. That's what the West is, in my opinion. And I'm not taking sides because I live in the West. I've lived in the West for all my life, and I don't like to see what's happening, but it's the reality. Am I saying that Russia and China are better? No, but they're in a better position financially and economically, I think. But it doesn't mean to say that it's the end of the West. The West has had a good run, but it will come back. I'm going to show you here another thing. I spoke about this many years. Well, I've been speaking for the last few years since I started my channel. And I've borrowed this from Tavi Costa, who has been on the channel. And for a lot of, especially in 2019, 2020, 2021, you had a lot of bonds, especially European bonds, that had negative yields. It was almost 18 billion of it. And now they're disappearing. And that's another sign that the bond markets, and the title of this video is, let's have a look again, because sometimes I forget it. What is it? Anyway. Oh yeah, can the Fed control, has the Fed lost control of the bond market? And why do I ask that question? Well, because it is possible that the Fed could, and the other central banks could manage higher yields, but we're getting to a point where we've had such a big bond bubble that we could see things get really nasty, very illiquid, if people because a lot of people are buying bonds not for their returns, but for speculation. Even hedge funds, mutual funds, pension funds, they're buying bonds. Yes, there were negative yields, but when you have negative yields, the prices go up. But when it reverses and yields start going up, the prices will go down quite quickly. And that's one of the things that I think is pointing to trouble in the bond market. So we had another super chat. Dmitry Shmerkovich, thank you. Putin said he will sell gas in rubles. He didn't say which ones, paper or gold. What would gold ruble do to a bond market? Imagine gold ruble do. I think it's already having an impact, Dimitri, and that's the reason why we're seeing yields go up so much, not just in the US, but other countries as well. The US has the most to lose, of course, because a lot of the demand for dollars is translated into the purchase of treasuries. So just to give you an idea, the 10-year yield started the year at 1.5%, and we're now almost at 2.5%. And that's a big move. Echo says bond vigilantes. Yeah, they've been asleep for decades, the bond vigilantes, but they might be coming back. Over here says, I don't fear death, I fear homelessness, living dead. BP, if you had to pick a way to leverage on the price movement of gold, would you prefer to do it buying silver or buying gold miners? You could do it either way, I guess. Yeah, I don't have anything against buying the junior miners, because I think the big miners, I have, miners like Newmont and Barrick, they've done really well. They're near all-time highs, especially Newmont. But yeah, silver miners, or buying silver is a way to leverage. Let's have a look here. I got some more. Oh yeah, I wanted to show you guys some facts about the asset markets, because a lot of people think the stock markets are the biggest markets, because all we hear on TV, CNBC, Bloomberg, is about stocks. But if you look at here, this is a global equity market cap. So it's 105.8 trillion. That's the latest data they have. This is from SIFMA.org. It's a capital markets fact book. So you see US is the biggest equity market, emerging markets number 2, actually. Then you have DM, not sure what that is, DM. Developed markets, EU. But what's interesting, if you look at global bond markets, you see it's 123.5 trillion, while the equity markets are 105.8 trillion. So there you go. Just wanted to show you that. And that's why bond markets are so important. And also treasuries and government bonds, they're also used to as collateral. A lot of hedge funds, a lot of traders, they park US Treasuries, T-bills or T-notes with brokerages, and brokerages allow them to trade with that collateral. So if the collateral starts going down in value like it's doing now because yields are rising, that could disrupt all asset classes, bonds, stocks, commodities, everything, even though I think longer term commodities are still the place to be. Matt Bittner, Biden should be removed from power and put in a nursing home. Well, there are legal ways to do that. I think it's the 25th Amendment. And I think it's his cabinet that has to push for that. Super Seamster from Bakersfield. Hi, Super Seamster. Nice to see you here. Larson chat, you mentioned if US were to go back on gold standard, that gold would be 1-to-1 with the Dow. Do you think the gold goes up or Dow goes down or combo? Well, the 1-to-1 Dow gold ratio, that's where I expect things to rebalance. And from there, and it could go even below. So you could get more than one Dow for an ounce of gold. But from there, it means that the credit cycle has been flushed out and that the world, the system is ready to start again, hopefully under a sound money system. And then I would expect the Dow and financial assets to outperform gold. Maybe not so much as it did like in the late 90s, early 2000s, where you needed over 40 ounces of gold to buy one Dow, but maybe 10-to-1 under a sound money system. Yeah, all the 1-to-1 signifies, in my opinion, is a rebalancing of the scales from paper, to real money. And then from there, if people, it will take take years, people will start, giving credit again, and the, paper assets will start outperforming again, I think. But I think we're around 14 or 15 right now, the Dow gold ratio. So we've got a lot of room on the downside still. Echo, are you worried about yield curve inverting? I have some bank shares. Yeah, I mean, I'm not worried about it. I'm not exposed to banks. All it points to is an economy that could slow down because banks usually borrow cheaply for short term, and then they lend long term for a higher rate. But if that relationship inverts, then it hurts bank profitabilities. It means they will lend, they'll originate less credit to the economy, and the economy slows down. So yeah, I think that's the way we're going. And I think the Fed is desperate to maybe raise as much as possible so that when the recession does hit, they'll be able to cut. I think that's the only reason they're raising rates. Do you think, Pablo, do you think American LNG is enough to supply Europe's demand to boycott the petro ruble? I don't know the exact figures. And I think LNG is a lot more expensive because it has to be shipped vessel. There's no pipelines from the US. So I don't know. I don't think it will. It will, it won't damage the petrol ruble or the gas ruble, really, natural gas ruble. It just seems too easy. And unfortunately, everything the West does now doesn't work. So I don't think that will work either. But I don't know the specific numbers. Christopher Powerthorse, 7% deflation halves your wealth every 10 years. You mean inflation? Yeah, I mean, we've got inflation right now. We've got rising prices, and the currency is losing, losing value. But in a deflation, the currency gains value versus things. I guess you could argue we are in a deflation if you consider gold as money, and it has been. We have been. The stock market, the Dow was at you needed 43 ounces to buy one Dow in 2000, and now you only need about 14, 16 or thereabouts. I don't know exactly where it is. So actually, stock prices have deflated versus real money, but not versus the fiat dollar. P, what is your opinion on Basel III and gold? I covered that a lot last year because I got a lot of questions about that. I try not to worry too much about Basel III and gold, because the reason I hold gold is because all fiat currencies go to zero, and gold and silver have never gone to zero. Yes, maybe if Basel III is really implemented in terms of gold, it could help the price, but it's not something I focus on. Gordon Hamilton, incredible that world equity markets at 105 trillion, and there's so much poverty in the world, a stain on mankind. Yeah, I mean, there are a couple of things about that. I think equity markets are way overvalued. So that 105 trillion is a lot of fake wealth. But the other point is that the reason why there's so much poverty is because this 105 trillion number is only possible because credit is so cheap, and usually it's the very big corporations and important, wealthy individuals that get the cheap credit, and they get richer and richer, and the poorer, the general public, they suffer because the currency is losing value and they can't protect themselves. So I agree with you about it being a stain on mankind, and I think it's mainly because of the monetary system, which is a dishonest system. It's cheating, really. It's like, can you imagine if we had a system of measurement that the inches or millimeters or centimeters or yards and kilometers or miles changed every day, and you try to cope with that, and that you could, and the bankers could trade that, it would be a hectic world. We wouldn't be able to live normally, and that's what has happened to money. They made the receipt for money, which is really real, gold and silver. They made the receipt the money, and then they said, well, we can, issue these receipts without any money, as many as we want, and that's why we're in such a mess. Bingo Wings, what is the point of no returns on bonds? Good question, because I do have a chart I wanted to show you, and I'm going to bring up the 10-year yield for the 10-year note. So US 10-year note. So in the bond market, in the treasury market, like from 1 week to 1 year, you call them bills. And then over a year to 10 year, they're called notes. And anything above 10 years is called the bond. So here's the, I've got this chart is going back to 1962. So 50-year chart. So you asked me the point of no return. I think it's here. We're 3.15. That was the high in October of 2018. I really think if we break through there, all hell could break loose, even though probably the Fed will try to stop that from happening. But yeah, so I think it's 3.15 on the 10-year, and we're not too far from there because we're at 2.5 already now. This is a little difficult for me to, let me just go like this. So yeah, as you can see here, we're already almost at 2.5. We hit 2.5 last week. So yeah, it's this level here, 3.15, 3.2. Yeah, that's really the line in the sand for the Fed. And then I'll show you as well. This is very familiar to me because I used to trade these futures. This is the 10-year future, 10-year Treasury future, and the monthly nearby. Because what happens in the futures, Treasury futures, for example, they trade the March, June, SEP, and DEC futures. And let's say the June 2022, that will go off the board in September 2022. So this chart has just takes the nearby month, but going back to the early 80s, and this is the price, right? Earlier we saw the yields going down, but this is a good indicator as well of trouble, because this trend line has held for 40 years roughly. It almost broke. We did break that trend line back in 2018 when we reached that 3.15, 3.2, and we're breaking it right now. It looks pretty bad, doesn't it? So that's why I said if we break this level here in the price, that's the equivalent to breaking that 3.15. So, and this is a monthly chart, so this won't happen tomorrow or next week. We need to keep an eye on this chart on a monthly basis. So yeah, as you can see, this is the 10-year note, June 2022, but it takes all the other past front months into consideration, so it smooths out the chart. Dimitri, thank you again for your super chat. What is your definition of the point of no return? How about 10-year yield being above corporate bonds? Isn't that already a reality? Yeah, that would mean that people are losing faith and confidence in the US Treasury. I've noticed that high yield corporate bonds haven't done as badly year to date as treasuries. So yeah, that is but I would also expect if treasuries, suffer, have a big bear market, everything will go, bad, corporate bonds too. But I haven't really looked at the spread between the 10 years and the high quality corporates, but it's interesting what you're saying there. I have to have a look. Benoit Guillou says the euro is versus the dollar is trying to break its 20-year trend line too. Yeah, I mean the dollar has been relatively strong versus the euro and sterling and the yen, but it hasn't really been that strong versus the U1. I remember when the euro started trading in 99, I think. Yeah. I think 1 euro got down to like 82 cents. Yeah, 1 euro was worth 82 cents. Now, of course, 1 euro is worth around 110. So, but it was also worth as much as 160, I think, prior to the sovereign debt crisis. Yeah, Billy's okay. He's doing well. Uh, he doesn't see well at all anymore, but we go for walks regularly and he's eating well. So he's okay. The other thing about yields and interest rates going higher is that it affects the discount rate at which people price equities, or other bonds as well. It affects mortgage rates, credit card rates. So it's really in this financialized economy that we have, and markets being really leveraged, very leveraged as well, it could be very serious. Um, and that's why I think the Fed is going to have a tough time raising rates too often, even though we're told that they're going to raise it every meeting. I'm not sure. That's why I'm concerned about some kind of false flag, some big crisis to detract attention from that and to give the Fed and the Treasury not and other central banks and governments around the world an excuse to stimulate instead of taking back the stimulus. Look about that. The other thing I wanted to talk about today, and this is probably more for my UK viewers, but I mean it have ultimately it could affect everyone. So you have here Sunak's stealth pensions raid is a brutal attack on 1.6 million savers. So this is for more of the people who have been able to build a pretty relatively big nest egg in the UK through private pensions. What they're going to be doing is they're not going to, because right now pensions can be saved tax-free up to a limit of £1,073,100, the so-called lifetime allowance. Any savings over this level are taxed at the punishingly high rate of 55% when the money is withdrawn in retirement. And I know this doesn't apply to the general public because you have to have done really well to be able to save that amount of money. But there's still quite a bit of people affected, 1.6 million. And what's the government going to do? Well, normally that cap of 1.073 million is usually raised with the inflation rate so that it gets higher, and people who have more than that don't get punished when they retire and have to give up 55% of what they saved, which is really outrageous. But now they're going to cap. They're not going to let that go up anymore, the threshold, until 2026. So what that means, if some people's pensions go up quite a bit, let's say to 1.5 million, that means that basically they're going to have to give up about £250,000 if they retire in the next year or two. And there is going to be, of course, a lot of baby boomers retiring. So why am I talking about this? Yes, I think this is totally unfair, but one way, and I'm not a tax advisor, but I do know that, for example, in the UK, coins of the realm, gold coins of the realm, like sovereigns and Britannias, they're legal tender. So they're not a financial asset. So I think it's an interesting proposition. Instead of putting a lot of your savings into these pensions, and I'm not saying you have to stop paying into your private pension, but maybe think about buying some physical gold, and physical gold, really silver. You got the VAT, but sovereigns and Britannias. And why is that? Because there's no capital gains and it's not a financial asset. Physical gold and silver are not financial assets. So it's like buying, I don't know, it's like buying furniture or whatever, and it's not regulated, and it's not taxed. So I think that could be a way to try to diversify. If someone has been able to save quite a bit and has a big nest egg in the UK, of course, if someone has never bought gold or silver, you should do your homework and look for the best dealer. And people have asked me, where can I buy gold? So gold investments, I've got my promo code with them, Monaco64. And the other thing, Oliver and Simon Temple, they can help you. And yeah, they can help you with the ins and outs of the bullion market and how it's related to the capital gains tax rules in the UK. So by coins of the realm, I mean, the sovereign, the Britannia and sovereign. Yeah, Krugerrands are not coins of the realm. They're not taxable like when you buy them, but if you make a big profit on them, you'll be liable for capital gains. So yeah, check out goldinvestments.co.uk, and if you do call them or if you deal online, use my promo code Monaco64. So yeah, I think that would be a good way to get around these new pension rules. And I know that not many people have more than $1 million in savings, but a lot, over $1 million do. So there you go. D Big, I told you about Hex before launch. Pulse Chain and Pulse X are now pre-launch. Thanks for your content. You're welcome. Sarge says he's got a phone call. He's going to rewatch. That's not a problem. Have I got anything else here I wanted to talk about? No, I think that's, but yeah, this is, okay. I think we've covered almost everything. Joker Alpha says it's illogical to tax capital gains tax on gold and silver. Well, here in the UK, let's say you bought £100,000 worth of Krugerrands, and then next year it's worth 200,000, and you sold them. You would have to declare any profit above, I think it's 12,000. It could be more now, and then pay the I think it's the top tax rate that you pay. Let's say you've paid 40% tax rate, so you would get an exemption on 12,000. So you'd have to pay 40% on 88,000. But you could get around that, by not selling the Krugerrands, or maybe selling two or three instead of selling the whole thing. The thing is, with sovereigns and Britannias, there is no capital gains because they're legal tender, they're money. But I agree with you, it is illogical. A lot of these taxes are illogical, and I would say immoral, because you already work all your life, you pay a lot of income tax, a lot of national insurance, and all other taxes that they have, like VAT, what else? Council tax, and then you're able to save some, and then you want to access that savings, and they tax you on that too. It's just outrageous. So we got another 15 minutes. Shane O'Donnell, what is the feeling in Switzerland? Do they think they will keep their neutrality? Is it still a safe haven? Yeah, I think I didn't really talk much about the neutrality part, but I still think Switzerland is fairly safe. But unfortunately, yeah, it's moving closer and closer to the EU, I think. So yeah, but I don't really, yeah. So there you go. But they have all the problems we have, here and in other parts of the West. They've got the rising prices, small businesses, they struggle in Switzerland because there's a lot of, wages are very high and workers are protected, which in a way sometimes is a good thing. But I still think Switzerland is a good place. It is expensive, though. It's an expensive place. Benoit Guillou, basically you're taxed for trying to evade the inflation tax. That's right. They don't really want people being self-sufficient, because then people wouldn't want the welfare state and all this stuff. They want to make people think that the government helps people, and a lot of people buy into that. So they can't let you be free and independent. And if they cut the size of government, they cut taxation, you're going to have a lot of people complaining, oh, that's unfair, but it's all, yeah, unfortunate. Scott 49-140, I heard that Fed creates a special bond to stick in the Social Security trust funds, added to the general funds. Probably. Frank Pizzo, if I sell my gold here in New York City, I can't even get spot. Well, you need to, you don't have to just sell it in New York City. You could sell it in other places. You just have to check online. I'm sure you could find a bid above spot. John Bethia, how did VAT get started? I think it was in the 70s, it's a European tax. Yeah, a value added tax. And I've never understood, the real economy has to pay VAT. But for example, the bankers, when they trade, and make profits, trading back and forth, there's no VAT. Or you should have VAT for, financial transactions. It hurts. It's such a really bad tax unfair tax. And it's one of the reasons why, the system has become so financialized, because what's the point of opening a shop and buying and selling real things to people if you're going to be taxed 20% of it? What do? Well, you go and work in the city where there's no VAT. So yeah, I think it's really bad. Thank you, Blast from the Past, for your super chat. It says congrats on 60,000. Do you buy the 30-year bond? And if so, why? You're losing money relative to the CPI. Up until recently, and I guess that's a year ago or 18 months ago, let's say the CPI was 3 or 4%, and you bought a 30-year bond that was yielding 2%. Yes, you're losing 1 or 2%. But the reason why people bought it, or speculators and funds, hedge funds, is that, I showed that chart earlier of the 10-year future. It's been going up for the last 40 years. So yeah, you don't care if you're getting a negative return because the price is going up. Let's say if the price goes up by 10% a year because of, because people are buying bonds, you don't care if you get a negative return. And that's totally distorted. And that's happened because the central banks have manipulated yields and interest rates below the rate of price rises, or what you call inflation. But now that's changing. So CPI is what, 8%? It's probably more like 10. And the 10-year, the 30-year now is like 2.5 or 2.6. So you're losing big time, and you're also losing big time because the price is going down. So yeah, things are changing, and it's a really bad cocktail for the financial system. So yeah, I wouldn't do that anymore. And I think a lot of the people who had, all the speculators who have been doing it, they're going to stop. And this chart here, and I'll show it again. I know, the 30-year US bond never went negative, but the fact that you almost have zero bonds now that are negatively yielding is a sign that this game is up, that the bond bubble could be popping big time. And believe me, if the central banks lose control of the bond market, it's going to be crazy out there in financial land. So stop sharing that now. Chris Conman, thank you for your super chat. If the market starts to fall due to the Fed raising rates, what will they do? Will they save the stock market or fight inflation? Thanks. I think the Fed is right now doesn't have a choice, because a lot of people think the Fed controls interest rates. They might control the short-term rate, the Fed funds, which is an overnight rate charged to financial institutions by the Federal Reserve. And usually, up until recently, they've been able to control that short-term rate and also longer-term rates. But now longer-term rates are going up. They're leading the way. So if the Fed stops raising rates or even cuts rates, you could see a collapse of the bond markets. And why is this happening now? I think there's a lot of things, factors. One of them is the fact that they've lost control of price rises. And I don't even say inflation, because they created the inflation. And you have all the geopolitical supply chain mayhem in the world. So yeah, I think the Fed, they could try to cut rates, but that could backfire completely. And you could see longer term rates still rise. Joker Alpha, how cool would it be for your local city leaders to create laws that makes banks illegal? Well, I have nothing against banks. The purpose of banks originally were for, I guess, very wealthy people who had too many coins and they didn't want to keep it. They wanted to keep it safe. And those people safeguarded those coins. But then it's just gone really crazy. Yeah, the system is really screwed up now. It's there's a saying now that, you know, politics or, government doesn't work anymore. Education doesn't work anymore. The healthcare system doesn't work anymore. The monetary system doesn't work anymore. So everything is really broken. And that's one of those things as well. The banking system and the money is broken too. Helsinki says it's all Putin's fault. Yeah, that's right. Lily Robbins says Lynette Zhang thinks rates will go negative. I'm not too sure about that. Someone actually asked before I started, I saw a comment, and the question was, at what level of interest rates or yields will gold start coming down? And I think if you look back to the late 70s, or especially 1980, 81, it's when the central bank actually allows the short-term rate to go above the rate of CPI. And for that to happen now, we'd need maybe 10, 12% interest rates. So I think we're still far away from that. When you do that, then you make it more attractive to sell your gold and put money in the bank to earn above inflation, but we don't have that. Corruption begets corruption. Nuno Teixeira, Mario, your thought on war as a means to eliminate government debt? Well, yeah, I mean, war. Yeah, I'll show you. Yeah, that is the way they do it. I've got here, I bought this on eBay. It's a German government international 5.5 loan issued in 1930. It's a gold. This is a gold loan to the German government. And it was supposed to mature in 1965. And I even have the coupons. The coupons were clipped. The coupons were clipped until December 1944, as you can see here. But then in the early 50s, all this bond issue was defaulted upon. And why did they default? Well, because of World War II and the fact that the Germans lost World War II. And notice who was involved in this? JP Morgan. So there you go. Yeah, war is a way of cleaning the mess, unfortunately. And that's why it's good to have gold, because if you had this was payable, in gold as well, but they defaulted on it. So it's paper. There you go. BP, quick question. In the US debt clock site, why did the price of silver go from 5,000 to 2,500? BP, I don't follow the price of silver or gold in the debt clock, because the price of silver is unfortunately, the right now it's still set by the paper market. The only thing I really follow in that debt clock is the national debt, the GDP numbers, and the tax numbers. But I'm not sure how they work out that price of silver and why it's gone down. I ignore it. AA, do companies located in the city of London pay a different tax rate to other companies located in other areas of the UK? No, they don't. They don't. But the banks get preferential. Yeah, they do actually. I think last year there's this new minimum global corporate tax rate, and the UK was able to exempt the city from that tax. So yeah, they do pay a different tax. And what I mean by why don't banks pay VAT, on trading? They trade so many trillions of dollars every day, and they don't pay any tax. While, if we buy and sell, clothes or shoes in shops, you have to pay VAT. That's what I meant. So, yeah, Billy does snore a lot. He's snoring right now. So, yeah, it's 10 o'clock. So I'm going to say thank you to everyone for being here, for asking questions. And I'm sorry if I didn't answer all the questions, but yeah, tried my best. So I wish you all a great rest of the weekend, a great week, and I'll talk to you tomorrow. Take care. Bye.